Is the Miami market going to crash? My name is Christopher Lazaro, and thank you for joining me today. I'm a licensed real estate broker and market analyst here in Miami-Dade County. This is a question that I get asked all the time these days. It has literally begun to trump the question, is now a good time to buy? Is now a good time to sell? Which is actually the most frequently asked question in typical markets from my customers. Today we're going to look at Miami-Dade County, all 127 zip codes, grouped together into one aggregate set of data. We're going to keep it very simple. We're not going to get too crazy, just nice big round numbers. And we're going to take a look at what happened in December, what I've been able to pull so far from January, because the board, Miami Association of Realtors, has not yet pushed out its official numbers on that from the MLS system, et cetera. And then we're going to look into my crystal ball and see where we're going. Is Miami going to skip this market crash, or is it going to be part of it? You be the judge. Let's move on to my desktop and find
Starting us off, we're going to look at February 1st through February 12th of 2023 versus the same time period in 2022. As you can see, listing volume is up 90% year over year. However, I would like you to take that within the context of normal listing volume is well over 5,000. What has happened is that we're still at historical lows in terms of listing volume. So while 90% sounds amazing and has certainly been a breath of fresh air in many respects, because we really needed the inventory, the fact is that we are still historically low when it comes to 10-year average, right? Year over year also for the same time period of February 1st through the 12th, 2023 versus the same time period 2022. 193 listings sold versus, and that's down 54% year over year. 509 listings pending, 17.9% we're down year over year. However, let's take a look at the month-by-month chart for sales, single family. Okay, single family sold versus single family pending. The red line is pending sales, green are actual sales. So we peaked in March of 2022 at 1,409 listings sold. We saw a steady gradual decline because right about here is where those interest rates started really ratcheting up and killed the mortgage market. And you started seeing all the layoffs at all the lenders as people with mortgage licenses now started to starve. Now, January 2023, we're 538 listings, very low versus year over year last year. However, if you take a look at the pending sales, we're at 948 pending sales for the month of January. That is an enormous 45% increase, relative to the prior month, okay? So we're seeing a rebound in the market, and the reason is that sellers, I think, are finally getting the memo that, I don't think that this year is going to be another leg up of 20 or 30%. In fact, in my view, I think in some markets we might lose a few percent. There may be other markets throughout Florida and tertiary markets that lose as much as 20%. However, in Miami-Dade County, I have a feeling we're going to be up marginally 4 or 5%, which is actually considered neutral. Moving on. Residential single-family homes. This picture, the picture says 1,000 words, right? We got down to literally 1.3 months of inventory in March of 2022, just as we saw the peak in sales. And since then, we have climbed to 7.1 months of available inventory, which is pretty good, in terms of inventory, except prices have only corrected a little bit. I still think that there's a lot more memos to go out to sellers, in my opinion. And one of the reasons being is, and you'll see this in other metrics, and you can Google it, if I believe the median household income in Miami-Dade County is something like in high 50s, low $60,000 range, most people cannot buy their house again if they needed to. And that's obviously an issue. So people can't even afford to live in their own neighborhoods anymore. And so that has created a housing crisis, and now there's an enormous demand that the state and the local agencies are rallying around creating affordable and workforce housing. Okay, affordable housing is for marginalized people with very low income. Workforce housing, these are your police, these are your nurses, these are your people with middle income. They're just like you and me, everyday people going to work. We don't want them having to commute 3 hours to get into Miami. So housing needs to remain affordable, local to where you're going to need those services. And in this case, those are obviously first responders, emergency services. We need them more than anybody, Next, residential single-family homes, January 2023, median sold price was neutral. I was just talking about this. As you can see, 553,000 was the median sold price, which is kind of high, actually. Not everybody can afford a $553,000 home. That was the median. That wasn't the average. Condos and townhomes, listing volume has increased 34% year over year, so we're up another 2,000 over where we were last year. Sold listings is down 72%. There are a number of reasons, for that as well. Condo dues have also gone up with inflation. I personally have seen, 20, 30, even 40% increases in HOA fees, condo fees, for customers that have previously made purchases. And, like you move in, it was $500 a month. Now it's $750 a month. That's significant. $250 a month is a lot of money for a lot of people. And you're also seeing very similar data here where we hit a low in January of the number of sales, but look at this massive spike in pending sales, up 39, almost 40%, mirroring what's going on in the single family home market. Again, here's your available inventory. As you can see, we hit the trough in March of 2022, and we are currently 8.6 months in condo. And condos will not rebound the way single-family homes have. Again, the inflation factor with HOAs, it really is a problem because energy costs have obviously gone up, water, sewer, all of these things, labor, paying your security guards if you have them, trash, everything has gone up across the boards. And it's interesting, side note, I've been down here 20 years, and up until 2021 and 2022, towards the end of 2021, I started seeing it. My electric bill with FPL, Florida Power and Light, actually went down almost like every year for 20 years. And then, like in just the last couple of years, it's doubled. I was paying $100 a month. Now I'm pushing $200 a month. It's crazy. And the thing is that I know FPL is doing they're being the responsible monopoly, because if you drive up the turnpike, you will look left if you're driving north, and you'll see miles at times of solar panels out there, miles of them out in the fields. They are aggressively building a solar presence and battery presence throughout the state. So my hat's off to them in that endeavor. I think we could all get behind that. Next, here's your stats. So in Miami-Dade, total home sales decreased 48.1% in December. And here's your 2021 numbers versus your 2022 numbers. So 2021, very hot. Obviously, we got down to almost about half, right? Single family homes, 2021 versus 2022, 1,356 versus 744. Condos, townhome transactions, 2,077 versus 1,035. Now, I want to put this into context, too. The first half of the year, in fact, I think it was really obviously the first quarter, really. But really, it weighed on the first half. I looked at the data, and I put out an article on my blog. The first half of the year, 50% of all townhomes and condos, were purchased full price in cash. And the PDFs, I'm not lying, they're on my blog. You can download them. I posted that article. We could just, I think it was July it was like August or July of last year. And single-family homes, 25% of all single-family homes in the first half of 2022 were purchased in cash at or above full price. So the latter half of 2022 is what has dragged these numbers down, and it's obviously from between inflation and mortgage rates, it has just been a catastrophe. However, it really hasn't changed things in terms of pricing all that much, other than the sellers have gotten some memos. They can't keep raising their prices, and basically most people are going to get out at a profit unless they literally bought right at the top, right? So total active listings for December of 2022 decreased by 18.9%. So we started to see buyers step in, and you're seeing all those pending sales. So all of those active listings, when you no longer have an active listing, it's either closed, it's pending, it's gone to active with contract. That means escrow hasn't hit the account yet, meaning, all right, we might be under contract. Let's see how serious they are. If the money hits the account, then we're going to pending, or they got expired, etc. But generally speaking, active listings decreased by 18.9%. I have a feeling that had a lot to do with people stepping in. It got cold, and a lot of people, you have the baby boomers retiring, and basically you're starting to see the largest, transfer of wealth in history starting to happen, and I'll get into that in other videos. However, right now, people are fleeing the cold, and they are coming here, and that is why you're seeing the active listings decrease, and that is why you see in January pending sales literally launch, sky high, and I'm expecting February sales, to dramatically increase as a result of those pending sales becoming closed sales. Miami-Dade County median sales price only increased 1.1%. Condos increased by 5.5%. So even with the headwinds of reduced sales, etc., prices continue to climb, is what this is saying. And I'm expecting that to moderate a little more. Then we see Broward County's data. I'll do that separately. Here is a headline. It was from Fortune. Miami to escape the home price correction in 2023, while the overheated housing markets like Austin get hammered, say the gurus at Goldman Sachs. Okay? And these guys really know what they're doing. After all, they're Goldman Sachs. Goldman Sachs. Check it out. With the Fed's ongoing inflation fight, which saw mortgage rates spike from 3 to 6% in 2022, it set off the second biggest home price correction in post-World War II era, right? On one hand, the 2.4% drop in U.S. home prices seen between June and October is small relative to the housing crash. Crash's 26% national home decline from the top in 2007 to the bottom in 2012. On the other hand, the ongoing home price correction might have a lot of gas left in the tank, and I believe that too. I think that a lot more people in these tertiary and secondary markets, okay? Like a primary market would be New York, right? And even though New York City is getting hit, there's always going to be a demand for New York. It's New York City. It's one of the largest cities in the world. Miami is the fastest emerging major city in the United States of America, one of the fastest growing cities in the world, as a matter of fact, right now. We are now officially, if there was ever a question before, there's no more question, it is a primary market. The Miami Metropolitan Area is also now is massive, and it's experiencing a tremendous amount of growth. Yes, there's neighborhood by neighborhood, you might see some soft spots. However, Miami Metropolitan Area basically is Miami-Dade County all the way to Jupiter, which is an enormous area. Anyway, look no further than a Goldman Sachs paper put out last week with the title "Getting Worse Before Getting Better." Okay, so they know it's going to get better. However, and they're going into all the declines that are going to happen throughout the year. But when you go south, they'll tell you that Miami is unlikely to see a dramatic drop. In fact, they're saying that we are going to see a modest increase of 3 to 5% in terms of home values, home prices, etc. That is what Goldman Sachs is predicting. The sages at Kaufman Rawson, Mark Feigelson, and Jeffrey Adams write that for nearly 3 years, COVID-19 pandemic have had lasting impact on the real estate markets across the country. In South Florida, we continue to see accelerating in-migration of people and companies, but there are other signs that the market is slowing down. Now, I understand that there's a lot of people coming here, but people have to understand that there's a real demand for houses here because of the tale of two policies, as I call it, right? You have a low tax state, high tax state. You also have a lot of people retiring. They want to reduce their expenses. There's a million reasons, and we have better weather. It's freezing up in New York. I just spent the entire day today in February, 75, 76 degrees with my windows open. It was blue skies, and I'm looking out at the beach. It's absolutely gorgeous. There's a million reasons why you would want to come here, okay? Politics aside, although there are plenty of people fleeing the communism of the North and the West and the governors who must not be named. Anyways. Accelerated interstate migration. Yeah, we're seeing that. You had cities and states where they were locking down during COVID, and Florida remained free the entire time. We were only shut down for 3 months. Florida reopened, or began reopening, it was a multi-month process, on June 1st of 2020. We were opened, and things gradually got better, and ultimately the last thing was the cruise industry to open, and that was because of a big snafu between the governor and the federal government. less demand and increased supply across South Florida home market. So they're saying that there's going to be increased supply. However, there's still not enough supply. As I was just saying, we have historically low inventory rates, right? And not to mention, prices have gotten elevated. And there's less motivation. I don't think we're going to have a very big supply because people are locked in at 2 and 3%. Who wants to give up a 3% mortgage to go get a 7 or 6%? Nobody wants to do that. Not to mention, property values have increased so dramatically that most people cannot afford to maintain their lifestyle at current interest rates if they decide to move. They certainly can't live in the same area because nobody's incomes went up as fast as property values did, and nobody's incomes went up as fast as mortgage rates did. So that's part of a problem. Rapidly rising rents. I get calls every day about this. They raised my rent by $1,000 a month. What am I going to do? Can I sue them? No, you can't. There's no law in the state of Florida, unless you're in some kind of controlled housing situation, Section 8 or whatever, affordable housing, There is no law that says they can raise it to $100,000 a month if they want to. There is nothing stopping them from doing that. There's nothing in the lease that I'm aware of. And I'm not a lawyer, okay, and I'm not interpreting a lease, but there's nothing that I've seen in my lease, which they're a very aggressive property management company that, they're on you, I would say that, if you're out of luck, you're going to have to find something. One of the biggest, saddest things that I've seen, though, in the last year is a lot of people call me saying, hey, do you accept Section 8? First of all, I'm a real estate broker. Your voucher is money. I love money, okay? I am not going to say no, ever, okay? I want to try and help you. My biggest problem is that the government hasn't caught up with reality. Your $1,200, $1,500, or $1,600 voucher that used to get you a 2-bedroom, 2-bath might not even get you a studio anymore. And when I do a search for sub $1,800 properties that for rent, there's like 10 throughout all of Miami-Dade County, and none of them are where you want to live, usually is what ends up happening. And it's an unfair situation, and it's putting me in a bind because it makes it harder for me to make a living helping you. Because I'm going to get my commission regardless of whether it's a voucher or you're paying in gold bullion. Doesn't matter to me, okay? And by the way, it's never up to the real estate broker. And any real estate broker that tells you they don't accept Section 8, yeah, you could probably sue them. You might even be able to get recovery. I would talk to an attorney if you're getting resistance and save your comments. Save whatever they've texted you back or emailed you back. And definitely, you could get them in trouble for that. They're not supposed to say that. However, understand that we are not the decision makers. We take your credit, we take your reports, we hand it off to someone else. It's either the landlord or the landlord's representative. How they come to the decision whether to accept you or not, I don't know. But I can tell you this, I think somebody would be crazy not to accept a Section 8 voucher, because if you think what happened during the COVID market, okay, where in COVID-19 lockdowns and stuff, anybody that didn't have Section 8 wasn't getting paid. You had the rent moratorium, and people stopped paying their rent. However, the cities and the counties and the state did not stop paying landlords who were accepting Section 8 vouchers. So they got paid, okay? So there's no reason why anybody should say no to that voucher, to be perfectly honest with you. I think it's crazy. It's bad business. Red hot Miami housing market expected to defy the 2023 cost correction as blue state exodus continues. So if you think I was getting into politics, obviously this is Fox, so they're going to hit that note and they're going to strike that point. But it is a tale of two policies, right? So we have low taxes and low corporate taxes. So we have no state income tax in the state of Florida. We also have a 5% corporate tax, which is basically nothing compared to most other places, right? So we want to understand that, policy is what's driving a lot of these companies like Citadel, okay, and a number of others. Like Carl Icahn, the famous activist investor, he literally, just a year and a half ago, moved into an office building up the street from me. They no sooner finished the office building, he took over 20% of the office building. And he's shutting down his operation at the General Motors building in New York City. Why? Because he's tired of paying for this stuff and he's tired of the misery, It's just the way it is. Down here, it's very free enterprise, free business, and I'm going to be doing a video on this. There's apparently a whole bunch of metrics which determine whether you're the freest state or not. And Florida, in like almost all metrics, is the freest state in the United States. As long as California and states like Massachusetts pass measures like the mansion tax or the millionaire's tax and continue to drive ultra-high net worth individuals out of their states, I believe this year is going to show healthy growth for Miami and South Florida. So there you have it, okay, from real estate expert Dina Golden-Tayer with Mornings with Maria. Beautiful, beautiful views, huh? Moving on. Key takeaways: Miami real estate predictions for 2023. Buying a house in Miami will get more expensive. Yep, I'm still seeing it. It's not getting as expensive. It's certainly slowed, but it's still going up. Miami foreclosures will increase. Yeah, sure, a lot of people have gotten over leveraged. There's people that have been borrowing money out of their home. I am sure that there will be at least some layoffs, businesses, recessions are recessions. Nobody escapes that. No neighborhood, no vicinity escapes recessions entirely. It's impossible, right? It affects us all, So there will be foreclosures. However, on this note, I used to run a brokerage that I had founded, Metro International Investments, and from 2016 to 2020, we had over 600 cases and we closed over 200 short sales. Okay, we were keeping people in their homes as long as possible, negotiating with the banks, etc. My little brokerage did 200 short sales, okay? And we had 80 to 100 of them listed at any given time. If you added them all up right now in Miami-Dade, Broward, and Palm Beach County, you only got a few hundred. So it's nowhere near where it was back then. And a lot of people have to understand, you're not going to get that deal this time around. A lot of wealthy people have come here. They've established banking relationships with the banks that matter, that have these notes. And you know what? Now bankers know they can call up, ABC Millionaire and say, hey, you want to buy something at 70 cents on the dollar, sight unseen, or 50 cents on the dollar? And these people are going to mint money. They're going to rehab the property. They're going to rent it out because their cost basis is going to be low. And unless you are sitting in cash, okay, because cash is king, you're not going to get that deal. So understand that it is going to be different this time because there is an entire class of people out there that are going to get the deal long before it ever hits MLS, okay? Rental properties will be the most viable investment strategy. Yeah, that's going to continue. And I also see a really big future in certain Airbnb, VRBO markets. Definitely give me a call about that. Disaster. I'll post this link to my blog. But you can see that, the stats were extremely strong despite 7 or 8 months of the entire year being a downturn, Axios reports, I went to Fox, so I have to give you Axios, let's keep things even, Steven. According to the experts at Axios, market will hold strong. Home sales could take a hit if mortgage rates were to continue surging, but that doesn't seem to be the case. Forecasts Ines Hedges Garcia, executive VP of Avanti Way Realty, really big brokerage, by the way. I've worked with them before. This sustained decline will help revive home buying, and we should see a more robust market for home sales in 2023. And as you saw in the graph earlier, pending sales in January launched. They're up almost 50%. Demand won't go anywhere. Okay, Fernando Arancibia, Jr., CEO of Arenchi Properties Realty, he says demand should stay strong in 2023. South Florida real estate is unique from other U.S. markets in that we continue to see high in-migration, both domestically and internationally. And yes, there's been a whole bunch of articles about a renewed interest from foreigners. Foreign direct investment, known as FDI, the acronym, is up astronomically. We haven't seen this level of interest since 2012, 2013. Buyers will feel relief. Even if home prices continue to appreciate, conditions will be calmer for buyers. Yes, I only see a moderate market in terms of 3-5% gains in home values, so things are going to moderate. Unless inflation ticks up again, strongly, and there's talk of that today, we are actually going to see prices stabilize, at least for the near term. And here we are, the return of foreign investment into Miami, according to BAI Capital. The Association of Real Estate Agents of Miami made a report in which more than 2,000 real estate experts from the city participated, which resulted in the fact that between August 2021 and July of 2022, the foreign capital invested in the purchase of properties in Miami County amounted to $6.8 billion, an increase of 34% in relation to the previous 12 months. That figure escapes any other growth observed in the United States, taking into account that at the national level, the rebound in this type of investment was 8.5%. And if you think about it, the average cost of properties purchased by foreign investors who bought real estate in Miami in the last year spent an average of $500,000, and only 66% of them made an investment in cash, demonstrating their high purchasing power coming from abroad. The study also revealed 60% of the acquisitions were condominiums or apartments, while the countries that contributed the most with foreign investment were Argentina, Colombia, Canada, Chile, Mexico, and Venezuela. An interesting particularity among those who invest in Miami is that most of them live outside the country, that is, in their places of origin. For example, 72% of those who bought property in the last year reside abroad. So why do people buy property in Miami if they don't live there? According to the study, the Association of Real Estate Agents, more than 70% did it to take advantage of it during their vacations or generate income in dollars, one of the strongest and most stable currencies globally. So yes, while everyone talks about more or less the decline of the dollar, etc., I can look into my crystal ball and tell you that the vast majority of currencies from other countries is going to depreciate faster than the U.S. dollar. And that is why people continue to bring money here, invest here. They convert their currencies into U.S. dollars. They buy U.S. assets that generate U.S. dollars. And therefore, I'm telling you, in 2023, barring some major league catastrophe, there will be no crash in Miami-Dade County. Thank you very much. Have a good night. Live vibrantly.